This is TradeFlow News, bringing you relevant news and insights from around the world. TradeFlow News, enabling trade for SMEs and economies worldwide.
These are some of the key topics that we will be looking into in today's program.
First, let's take a look at the overnight headlines which are impacting the commodity markets. Indian Oil Corp, the country's top refiner, said on Thursday it would resume purchases of Iranian oil if Washington lifts sanctions against Tehran over its disputed nuclear program. The European Union official leading talks to revive Iran's nuclear deal said on Wednesday he was confident an agreement would be reached as the negotiations adjourned, although European diplomats said success was not guaranteed with very difficult issues remaining. We were buying Iran crude earlier before sanctions, and I don't have any doubt why we will not buy Iran crude because that favors the Indian refining system if the sanctions are lifted, S.K. Gupta, head of finance at IOC, told an analyst call.
Key U.S. Environmental Protection Agency's biofuel blending mandates for this year and next are likely to be in line with those of 2020 as the agency accounts for weaker fuel demand since the onset of the coronavirus pandemic, three sources familiar with the matter said. That would spare the U.S. refining industry the added costs associated with the usual annual expansion in renewable volume obligations under the Renewable Fuel Standard, at the expense of biofuel producers in the corn industry which depend on regular increases to grow their businesses. The RFS requires refiners are meant to blend billions of gallons of biofuels like corn-based ethanol and biodiesel into their fuel, or buy tradable credits from those that do.
Moving on to the top news in the energy sector.
China's imports from Saudi Arabia slowed in April, but the kingdom retained its position as China's top supplier of crude oil for an eighth consecutive month, customs data showed on Thursday, while arrivals from the United Arab Emirates plunged. Shipments from Saudi Arabia were 6.47 million tons last month, or 1.57 million barrels per day, BPD, hitting their lowest since October, data from the General Administration of Chinese Customs showed on Thursday. Imports from Russia also dipped in April from a month earlier, to 6.3 million tons, or 1.53 million barrels of oil per day, in line with a scaleback in Chinese crude purchases as refiners faced narrowing margins.
Oil prices were on course for a third day of losses on Thursday after diplomats said progress was made towards a deal to lift sanctions on Iran, which could boost crude supply. Retracing some earlier losses, Brent crude was down 39 cents, or 0.5%, at $66.27 a barrel by 13:20 GMT. West Texas Intermediate U.S. oil lost 23 cents, or 0.3%, to $63.13 a barrel. Both contracts fell around 3% in the previous session. Iranian President Hassan Rouhani said in a televised speech on Thursday that sanctions on oil, shipping, petrochemicals, insurance and the central bank had been dealt with in the talks.
Next, we have the top news in metal markets.
Chinese iron ore and steel futures led a sell-off across the nation's metals complex on Thursday after the government sought stricter oversight of commodity markets to curb exorbitant prices, sparking a broad-based correction. September iron ore on the Dalian Commodity Exchange ended daytime trading 5.7% lower at 1,142 yuan and 50 fen, $177.40, a ton, after earlier hitting a three-week low of 1,102 yuan. Extending overnight losses, Dalian's most active contract has fallen 16% from a record 1,358 yuan hit on May 12. On the Singapore Exchange, the most traded June iron ore fell 3% to $200 a ton by 07:06 GMT. It touched a record peak of $233.75 on May 12.
Gold hovered close to a more than 4-month peak it scaled in the previous session, fueled by a dip in the dollar and U.S. yields as investors shrugged off the Federal Reserve's hints on possible tapering of economic support measures. Spot gold rose 0.4% to $1,876.80 per ounce by 10:36 a.m. Eastern Daylight Saving Time, 14:36 GMT. U.S. gold futures fell 0.2% to $1,878.10. Fed minutes showed a number of officials thought that if the recovery holds up, it might be appropriate to begin discussing a plan for adjusting the pace of asset purchases. We will now look at the top news in the agricultural sector. China's soybean imports from Brazil surged in April from the previous month. Customs data showed on Thursday, boosted by the arrival of cargoes that were ordered earlier in the year but delayed after rain hit the Brazilian crop. The world's top importer of soybeans brought in 5.08 million tons of the oilseed from leading supplier Brazil in April, sharply up from only 315,334 tons in March, data from the General Administration of Customs showed. But the figure was still below 5.939 million tons in the same month last year.
That is all for today's news on commodity markets. Stay tuned to TradeFlow News as we continue to provide you with more updates. We also invite you to follow us on Twitter at TradeFlow News, which allows you to watch our program on your mobile device or desktop to receive information from there.